Hey guys, what's up? Welcome to Chaz Whole channel. What is a recession? 2 consecutive quarters of negative GDP growth. But in the US, the National Bureau of Economic Research, NBER, considers a variety of indicators: job losses, real income, production, and consumer spending. You've probably felt it too. Rising prices, higher interest rates, job cuts in big companies. But is it just economic noise, or is the US really heading toward a full-blown recession? Today, we're cutting through the headlines and giving you the facts, what the experts are saying, what the numbers really mean, and what you should be doing right now to protect your money. This affects not just Americans, but the global economy, including Canada and the UK. So let's dive in. Signs we might be headed for a recession. Inverted yield curve, one of the most accurate recession predictors in history. The yield curve has been inverted for months. When short-term interest rates are higher than long-term ones, it often signals a recession is coming within the next year. Consumer confidence is falling. According to the latest University of Michigan survey, consumer sentiment is dropping. That means people are spending less and saving more, both signs of economic slowdown. Rising interest rates, the Federal Reserve has aggressively raised rates to fight inflation. While inflation is cooling, those high rates make borrowing more expensive, for homes, cars, and businesses. Corporate layoffs, big names like Amazon, Google, and Tesla have announced thousands of layoffs. Tech is often the first to react to downturns. If job losses spread, it could trigger a domino effect across sectors. How a US recession impacts the world. The US isn't just any economy, it's the engine of global commerce. If it stalls, the whole world feels it. Global markets react instantly. US markets like the S&P 500 and Nasdaq are bellwethers for global investors. A dip in US stocks can trigger panic selling in Europe, Asia, and emerging markets. Strengthening dollar. In recessions, the US dollar often strengthens as a safe haven. This hurts developing nations with dollar-denominated debt, making repayment harder and increasing default risks. Shrinking trade. A struggling US consumer base means lower demand for global exports: electronics from China, cars from Germany, apparel from Bangladesh. Supply chains are also disrupted when US demand weakens. Central banks feel the pressure if the Fed cuts interest rates. Other central banks often follow to avoid currency imbalances. But too many rate cuts could reignite inflation globally. Geopolitical repercussions. A weak US economy can reduce Washington's influence abroad, embolden economic rivals like China, and increase global political uncertainty. What the experts are saying. Jerome Powell, US Federal Reserve Chairman, the path to a soft landing is narrow. Translation: the Fed is trying to reduce inflation without causing a full recession, but even Powell admits it's a tough balance. Goldman Sachs recently adjusted their recession probability for the next 12 months to 20%, down from 35%. That's optimistic, but others aren't so sure. JPMorgan Chase CEO Jamie Dimon warns we should prepare for economic hurricanes, suggesting the financial system is more fragile than it appears. Nouriel Roubini, aka Dr. Doom, predicts a severe, prolonged recession, pointing to global debt, geopolitical instability, and high interest rates as key risks. So, opinions vary, but there's a growing consensus. Even if it's not a deep crash, a slowdown is likely. What you should be doing right now: strengthen your emergency fund, aim for 3 to 6 months of living expenses. Build or maintain a 3 to 6 month emergency fund. This gives you breathing room if layoffs increase or prices spike again. Pay down high interest debt, especially credit cards. Reassess investments. Are you too exposed to risk? In uncertain times, many investors shift toward dividend stocks, bonds, or even money market funds. Delay big purchases. That new car or house can wait. With high interest rates and price volatility, cash is king right now. Upskill or reskill. If your job or industry is at risk, use this time to improve your resume. Learn a new software, earn a certificate, or explore side hustles. In economic slowdowns, job security weakens. Learning high-demand skills and expanding your professional network can provide a safety cushion. Avoid panic, recessions come and go. Long-term strategies usually win. Stick to your plan, stay informed, and stay calm. Historically, recessions are temporary. Stay diversified and don't sell investments out of fear. Stay informed, follow credible news and economic updates. Avoid falling for social media panic or financial misinformation. So, is the US headed for a recession? The signs are mixed, but the risks are real. Whether you're in New York, Toronto, or London, the ripple effects will be felt worldwide. If this helped you feel more informed, do us a favor. Hit that like button, subscribe to Cash Hold, and tap the bell so you never miss a smart money update. We break down complex financial stories into simple, useful insights every week. Stay smart, stay prepared, and we'll see you in the next video.